Stocks are sharply lower again this morning, and joining us now with a look at the busy week for earnings and some potential individual names maybe to buy on the dip. Jason Brady is CEO of Thornburg Investment Management. Thornburg has $43 billion under management. We different times have been to Davos, where whatever the prevailing sentiment or winds are, they can reverse quickly. Right. Kind of weird that it happened again. Just the overall market, would you be buying even the stocks you like on the dip now, or would you wait for things to shake out or get right in?
Sure. Look, I think that U.S. stocks generally don't have a lot of valuation support. They're expensive.
Yeah.
I think some of the earnings you're seeing this week, whether it's Apple or Microsoft, these are becoming the utilities of our time. So those are the names that you might feel a little bit more comfortable with. However, in general, you look at credit being extended, you look at U.S. equity being pretty extended. This is time to be cautious.
Well, let's start with Apple, and
sure.
I don't utilities you think of as widows and orphans stocks.
Sure.
That doesn't look like a utility to me. But you mean in terms of being ubiquitous and in all parts of our life? What do you mean?
Exactly. Also, the real move, obviously, into services. So that is, look, this is the biggest stock in the world. There's not a whole lot of new news here. But the reality is that services growth has been in the mid to high teens, and we can really expect that to continue, I think. The other piece is iPhone sales. It's hard to get away from that with Apple. But here, I think the market underappreciates how good the iPhone sales for 11 are going to be. It's just going to be a support. So it's really about revenues for this name.
You like Microsoft? You would buy this on the dip as well? Another big cap tech.
I would, yeah. Again, utility, look, you're right, up and to the right, that's nice. And with low volatility, I think that's more of a function of the market. Microsoft is really, investors should focus on Azure. It's really a game changer. If you think about the value of a Microsoft customer, consumer customer, with the cloud, that's 1.5 to 1.8 times the overall lifetime value of a customer, moving from the desktop to the cloud. And they have an advantage position because they're already on your desktop to really be a strong competitor with Amazon.
All right, and then finally, look, I don't even know what finally. No, I do. Finally, Pfizer, which is not tech, but nice dividend. One of the major pharmaceutical players.
Right. There's a bit of a theme here. So not so much that Microsoft and Pfizer are the same stock, not at all. But what you're looking at is less of a concept name and something where there's real drivers underneath it. We feel like Pfizer really sandbagged right about here. Sandbagged what 2020 could be for the kind of new Pfizer, the RemainCo, after the Mylan Upjohn merger. So this is an attractive dividend, closing on 4%, probably 4% this morning, 13 times. This is a basic blocking and tackling name. Dividend payers really is where investors can get paid. They're cheaper in the marketplace relative to non-dividend payers than they've been in many, many years.
Okay. Jason, thank you.
Sure.
We'll see you again. $43 billion. You look, you must dye your hair. You're not worried? You don't have gray hair? You don't? That's a lot to be responsible for.
Well, I mean, the folks here do a great job making you look better than you really do, except you.
Speak for yourself. Yeah, thanks.